Hello, and welcome to Beyond the Deal, a podcast where we go deeper than the numbers and discuss what leads to success in life and business. I'm your host, Michael Wagman, and I am obsessed with personal growth. I've been able to raise millions of dollars in capital while traveling around the world full time. Today on the show, my guest is Keshav Kolur. Now, he is a remarkable young man, which is a strange sentence for me to say, as usually I am the youngest person in the rooms that I hang out in, but he has accomplished quite a lot at quite a young age. He is a full-time employee at Meta while simultaneously raising millions of dollars for his alternative investment vehicles. Now, before we get into the show today, I'd like to thank the sponsors of today's show. Myself, Nimble Capital Group is my company. I'm the owner and co-founder. We are a boutique investment firm that provides a variety of investment vehicles for our investors, whether they're looking for cash flow, whether they're looking for tax depreciation, whether they're looking for equity appreciation, we've got something for you. Secondly, if you are interested in learning how to do what I do, I take on 10 students for my private one-on-one capital raising coaching every single month. So if you are interested, please click on the link in the description below. Now let's get into today's episode. All right, Keshav Kolur, welcome to the podcast.
Yeah, thanks for having me on, Michael. It's an honor to be here and excited to get into it today.
So for our listeners or viewers who don't know anything about you, do you mind giving us just a quick bio and tell us what you're doing today?
Yeah, quick bio, principal and founder of Clive Capital. We help primarily tech professionals build the generational wealth, financial freedom, passive income, all that good stuff through passive private equity investments across various industries. Right now, we're in real estate, private lending, and oil and gas. So far, I come from a tech background, used to work at Amazon. Now I'm at Meta and I'm based out of New York City. So a lot of my investors are also from Meta, Amazon, Google, these big tech companies. Really concentrating in the stock market, too busy to diversify outside otherwise. So far I've helped people at these companies invest into over 1,000 apartments, renovation, 500 single family rental homes under development, and we're expanding into industrial real estate, private lending, and actually just helped investors get into oil and gas deal December of last year for the tax benefits. So I'm not saying we own all of these assets 100%. That is a clarification I like to make, but I've helped my investors be one of many into these investment opportunities.
So something I think immediately I noticed that sets you apart from a lot of guests on this show is I often talk to people who do exactly what you and I both do, which is alternative and private investments, but they left the 9 to 5 to do that. And you are somebody who is still choosing to work the 9 to 5 and simultaneously raise capital for alternative investments. So can you talk to us a little bit about the thought process there?
Yeah, so I graduated college about 6 years ago, and so I haven't been in this investing game as long as everyone else has. To accommodate for that, though, or to account for that, obviously I work with people who are more experienced than I am, who have decades of experience, who have the gray hairs, and bring the experience to the operating team. For me, it's a matter of financial freedom. I'm chasing it for myself, and when it does make sense, one day I will be going into this full time because it is my passion to help people, invest, achieve financial freedom, all that good stuff, open up a life of options.
Good. I, as somebody in a very similar position, tend to be probably the youngest person in the room by at least 10 years in most of the rooms that I'm hanging out in. But I've been doing real estate now for at least 8 years. And I can remember being 25 and trying to do residential real estate and trying to convince people who were much my senior to choose me over another realtor or whoever. It was a
Yeah.
struggle. So have you had any pushback to your age from the people who you're approaching as investors and what you're trying to accomplish?
And not primarily my age, but just that I haven't been doing this for 10, 20 years. When people ask me that, I tell them that I was in middle school 10 years ago, if I'm doing my math correctly. Oh, graduating high school, sorry, 10 years ago. So I'm getting to the end of the other end of the spectrum too, as Father Time gets to all of us. But people will usually say, "Have you gone full cycle on any of your opportunities yet?" Which is a very fair, necessary question you should ask anyone. And so I always tell people, "Hey, I started this 3 years ago, and so I personally haven't gone full cycle, but my partners who do this full time have the gray hairs, have been doing this for decades, have gone full cycle on these opportunities, and I work with them." but they're the captain of the ship. So
Yeah, I completely agree and can relate because I've been doing this for about 4.5 years now. And, you know, essentially with any multifamily syndication, that means you're 4.5 years into a 5 year plan. And we have deals that have been cash flowing since day one. And whenever investors ask me, have you had an exit? I said, well, we could sell right now, but this is the worst time to sell anything, right? This is the time that you probably want to either be finding deals or buying or waiting for the market to bottom out a little bit more. But this is a terrible time to be a seller. And we're not going to do the wrong things by our investors by selling when it's the wrong time, right? So there's all sorts of ways to navigate that. And I really like what you said, because if you are getting into this industry for the first time, you have to leverage the experience of people who've already been there, right? Because one,
yeah.
I mean, you don't know what you don't know, and two, your investors pretty much always want to hear that, right? Have you had any sort of major sort of deals go sideways or anything these last few years?
Yeah, my very first investment that I made, actually, it was apartment building in Texas. I made an investment as an LP. So this makes the story a little better. It was just my money because it was my very first one. That one was acquired with floating rate debt. And so as you can imagine how that's panning out now, not doing all that well. Paused distributions for like the last year and a half, but they've still kept the property, so that's something good. As like, the last time, remember, I should probably check in on the status of my investment today. But that was the first one, so I learned a very important lesson there. Luckily, before I brought on any investor capital, and that's what I would always do. Like even most recently invested into oil and gas deal, November of 2023. That was new for me. Again, primarily for the tax benefits. Like because every 100K invested, I was able to reduce my W-2 taxable income by 80K on top of getting good returns. So even then, I put my own money first, trialed it before I brought it to my investors. But back to the original question, another deal that went sideways, we have a development deal in Louisiana right now, in Lafayette, Louisiana. We're building about 100 homes, single family rental homes. And we, have all of our permits. We are doing our construction, doing our thing. With our contractors, our general contractors down there. And suddenly the state changes their laws around sewage, like sewer treatment and things like that. So that change in like law at the state level actually made it so that we had to install our own sewer treatment plant on site. That delayed the project by about 6 months, cost us an extra, I want to say 800 grand. Then that kind of stuff, I guess, that happens in development. I wouldn't call it a failure, but that's just like an unexpected road.
Yeah, absolutely. And I think those stories are unfortunately not unique to any degree in this current time zone that we are in. The last 2.5 years in real estate have certainly been a wild ride since the interest rate hike with the stagnation and the price changes and the cap rates and just inflation in general and the cost of building and repairing units and all these kinds of things. It has just been an absolutely wild time. And I know tons and tons of operators who have had to pause distributions after they've started. I've known tons of operators with floating rate debt. Thankfully, I had one deal with floating rate debt and I managed to refinance it within the first probably. We closed on it in June of 22 and then July of 22 is when the rates doubled. So it was perfect timing, but we were able to
Nice.
refinance eventually. So what kind of deals are you looking for right now, given the economy, given where things are? What are you trying to find?
The basis of our portfolios will always be something stable like multifamily real estate, value add, tried and true, or it will even be like industrial real estate. That's another asset class I've gotten pretty comfortable with. So, but at the same time, we've seen that real estate's getting crowded over the last few years as people find out about syndications and investing into these opportunities. There's more capital out there chasing these deals, and the returns are compressing. And so, what I'd like to do for myself and for my investors is always stay one step ahead, right? Be the early bird that gets the worm. So state's great. I am looking now for opportunities that have better tax benefits, though, while not compromising on returns. I'm looking for opportunities that have better liquidity. Right. So not a 3-year hold, not a 5-year hold, not a 7-year hold, a year or less. Again, without significantly compromising returns, like a 15% return or even a 13, whatever it is. And then lastly, just higher returns, right? I don't want no meme coins, obviously. Still an asset class or a business strategy that is untapped, relatively niche, A lot of people have heard about it. It's with the team that I trust, people that I trust to execute. Call it maybe like anything north of the 20% IRR. That's not development. I mean, development's pretty standard, but something that doesn't carry as much risk as development. So yeah, I'm just exploring what's out there. I'm not taking too many risks. I'm still trying to be strategic about it, but just seeing what's out there beyond multifamily and real estate in general.
Understood. Have you thought about buying business? I know that is the trending topic of the day that everybody and their mother wants to get involved with business buying right now.
Yeah, it's something I have looked at. I don't know that it's something I want to get into just yet, just because we have a lot going on already. But if we find a partner who is buying businesses and has amazing IRRs, cash on cash returns, significantly more risk, or if there is, the returns justify the risk, that's definitely something we would be interested in. Yes.
Got it. So I want to go back a second. So you're working at, I think, what you said, Google first or Amazon, and now you're at Meta?
Amazon.
Amazon.
Yeah, Amazon.
You're at Amazon first. And what made you decide I'm working at Amazon and now I want to raise capital? You've done an LP investment. What made you decide to go to the active side and try to be a GP?
Yeah, I started seeing, so it took me a year to get comfortable with the idea of syndications, that it was a legitimate concept, because at the time, no one I knew was doing it except for my friend's dad. That was it. And he was investing as an LP. So I just wanted to do my due diligence that this was real. I spent a year, made that first investment, September of 2021, started seeing the cash flow coming in. And at that point, it was a proof of concept to me. So I thought, hey, if I'm going to do this for myself, I might as well do it for my friends and family and anyone else who's interested too. I really wish, someone had told my parents about these types of investments, because the stock market has done right by them. And I think a lot of people can agree with that sentiment, that all we're seeing is 10% return on average for whatever the last 3-4 decades. Even if you bought a decade ago and you sold recently, like at close to the top of a bull market, I would say, like, valuations are pretty high, you would still get only an 11% return. And there's no tax benefits, there's no cash flow, there's a lot of volatility. So I just wish someone had told me, my parents, my family about this earlier. And so that's what I hope to set out, is show people that there's something better than the stock market. You can invest like the wealthy. You don't have to be a millionaire or have a country club membership or a yacht. You can invest 50,000. And I understand that's not a little amount, even for most people. Most people in this country, unfortunately, live paycheck to paycheck. But for those who are fortunate enough to save that money, you can get yourself out of the rat race a lot earlier than what you might have thought of originally, with solely 10% mutual funds and ETFs.
So how are you finding the capital raising environment at this time? And what are you doing right now? I know you mentioned that a lot of your investors are your coworkers. So, I mean, I guess you have proximity to these people on a daily basis, but are you doing any sort of outreach, any advertising? Are you doing anything like that to sort of get yourself in front of new investors? And how much of your time are you spending capital raising while you're still a full-time employee?
Yeah, so I would say, I would say they're both my full-time jobs. I like them a lot. So capital raisings for anywhere from like 20 to 30 hours a week, I would say. I mean, some weeks even more, just depending on what my work schedule is like. And so as far as how I'm reaching out to people, I feel like there's a couple of different pillars or buckets I typically put it into. There's obviously your close sphere. There's like friends and family and coworkers, I would say. And then there's social media, which has been huge, just putting content out there, just like you are with this podcast. We have a podcast as well for generational wealth, where we put up weekly episodes on various wealth topics. And so, yeah, social media, posting on LinkedIn, posting on Facebook about what we're doing. And let me think if there's anything else. And then beyond that, I would say it's networking with people, right? Going to in-person meetups, networking within the industry too, referrals. So
do you feel like there has been a sort of a change in the atmosphere when it comes to people's willingness to invest, even post-election, let's call it? I mean, in 2025 versus 4, I think personally, I have seen a significant uptick in just maybe investor optimism or sentiment, but how do you feel about that?
yeah, I don't know that we can ever get back to the frenzy that it was like during 0% era, like 2020 through 2022. Like, I don't think we'll ever get back to that in our lifetimes, at least. Maybe I'm wrong. But And people have since become more skeptical, a little bit jaded, more cautious, rightfully so, just because of all the deals that went under and the many deals out there to this day that are still struggling as we speak. So it's not going to be as easy as back then. People aren't going to be as, everything's rainbows and sunshines. But I think people are also getting accustomed to the new market now that, hey, rates are the highest they've been in almost 2 decades. And that's just something that we are going to have to get used to for the next year or two. How can I adjust my investment strategy given that? Right. And a lot of people leading up to the election were holding off just because they wanted to see what would happen with the election. The election's over. As you mentioned, I think that's what I'm noticing as well. People are very excited about just business and economic growth in general. Investors are excited to invest into more housing, especially with drill baby drill. We're more excited about oil and gas, especially too. And
Absolutely.
I think we don't see interest rates going lower anytime soon, at least. Inflation's been a little sticky. The economy's still kind of humming along. We'll see what these tariffs and everything, all the other policies do, but I don't see rates going significantly lower anytime soon either. So private lending has also been doing really well for us.
Absolutely. We have a debt fund as well. And I think that a lot of people right now are eager to invest in things that immediately produce cash flow. I have personally seen sort of a step away from the mindset of, okay, I'll just park my money for 5 years and I'll let it grow. I've seen a little bit more people want results now. And I think personally that probably has to do more with the cost of living crisis and inflation than anything else. I mean, if you really think about it, right, everything is probably about 50% more expensive than it was 2 years ago. And I often think about my tenants in those situations. And they're like, for example, January is always a really interesting month as a landlord because when Christmas comes around, your tenants often make a choice. Am I going to pay rent this month or am I going to get my family Christmas presents? Right. And that's an
Yeah.
unfortunate position to be in. But given the state of the economy, that's always my perception of what's going on right now. Do you have any sort of thoughts on that as far as your multifamily deals are concerned?
The multifamily deals that we're in, some of them are in Houston. And so, as we've seen, I think this year's going to be a record amount of supply hitting the market. And
Mm-hmm.
especially in these like really hot cake markets like Houston, your Dallas, your Atlantas, Phoenix, Austin. Markets are going to see uptick in vacancy. And so that's what happened with one of our properties, underperformed for a few months, distributions were paused, but then within 6 months, distributions resumed again. So going forward, but this year, as I mentioned, is going to be the peak, right, of supply. Then we're going to go back to a lack of, again, right, demand is going to outstrip supply. So we're pretty bullish on, I guess it depends on what these policies look like that are coming out about, the new administration making it easier for developers to develop. So if there's like a build baby build, then maybe there's a lot more supply. It just depends on how that regulation goes. But we're still pretty bullish on multifamily and its performance, as long as we make sure that we're buying in the right markets with the right teams.
That was going to be my next question. So, as far as markets are concerned, I mean, where are you looking and why?
For us, we look at, right now we're focusing on landlord-friendly states, primarily in the Southeast. We're looking at obviously areas that are growing, either like primary markets that are growing, or I guess, okay, any market that's growing, a secondary, tertiary market that's kind of a diamond in the rough. We don't have to worry about a risk of oversupply. And because no one really knows, like we bought 100 apartments in Lynchburg, Virginia, for example. We partnered with a team that we really trust. And again, not many people have heard of Lynchburg, Virginia. So usually secondary and tertiary markets, the good ones, they're not being oversupplied from these big firms, big developers out of New York and LA and Miami and all that. So they're overlooked usually. So sometimes you can find the right deal at a good price, get really good returns. So I wouldn't say market, like we're not really restricting ourselves to anything like a top 50 MSA or top 100 MSA. It just has to be, yeah, landlord friendly, and there has to be like a story behind it. Like, why is housing look bright for this? Doesn't necessarily have to be growth. It could also be just a lack of supply
Yeah.
going forward in the market.
Or stability. I'll tell you a market that has been really, really good to us. We own 100 units between 3 properties in Las Cruces, New Mexico, which most people are like, what? Why would you? Las Cruces, where?
Exactly.
Yeah, but it's New Mexico State is there. It's the second biggest city in New Mexico. And it's kind of an under the radar market that has been very good to us since day one. And the population growth has been like minimal but stable, and supply hasn't increased and rents have. And so You got a bunch of students who come in every year and they're always looking for housing. And sometimes that's even better because the parents pay rent, right? So that's a whole different
Exactly.
student housing. This isn't specifically student housing, but you do get that benefit sometimes when students live in your property. All right. So I want to shift gears a second here and talk a little bit about sort of habits and mindset in this podcast. We really do try to talk about more than just real estate and numbers and deals. So being that you are a full-time employee who essentially has two full-time jobs, as you have self-described, what are you doing to stay sane?
I get that question a lot. Investors always ask me on calls because a lot of them are balancing the same job that I'm balancing. So they're like, how do you do it? I would say one, for me, I don't have kids. So I think that probably, it opens up a lot of my time. And so that's one. I would say two, having a team around you is very important. When we're in our fund business, I have my business partner, John. He's at Amazon right now. He helps out with a lot of stuff. We have virtual assistants who help me a lot with admin tasks, emails, cleanings, getting me on yours and hosting folks like you on our podcast, bookkeeping, all of that stuff. So teamwork, delegating is definitely a big thing. And I think lastly, it's not lastly, I could go on for hours about this. It's also like liking what you do, then it doesn't really feel like work to be able to manage multiple things. So for me, running the investment fund, helping people invest passively into our opportunities doesn't really feel like a second job. I'll always pick up a phone call if it's an investor, new or current. And time management's pretty big. Like I don't not big on social media, not big on sports, not big on video games, TV. Like I just love working. And my wife gives me a hard time all the time telling me that I should pick up a hobby, but I just like to work. So that works pretty well. And I think you do have to be a little crazy to be able to juggle all of these things to do what most people won't do. I like what I do, and I know that as long as I stick with it for long enough and keep getting better every day, then I'll outperform everyone else. So, and lastly, another big thing is I like planning my day the night before. That one's been pretty helpful.
You just said a lot of really good things, and I want to unpack some of them.
Yeah.
First of all, I completely agree. You have to be a little delusional in the first place to take the leap, right? I mean,
Yeah.
I remember when somebody told me that I could buy a 100-unit apartment complex, and I was like, what do you mean? Regular people can own these? Like, but it's real. It's all real. You have to be willing to take that step and take that action. The second thing that I really like that you said is delegation. This is something that I always preach to my coaching students is you have to be able to take the things off of your plate that don't matter. And for some reason, people are just very averse to hiring a VA. I don't know what it is about, just thinking that how could I have an assistant, or I can't afford that, or it's my first employee, or whatever, some reason that they don't want to get into it. But I mean, you can train somebody to do all sorts of things for you and pay them a very reasonable amount of money. And I think that mind shift in the first place is really powerful, right? So, what was that like for you, and what do you have your VAs doing?
Yeah, I hired my VAs probably 2 or 3 months, and it really helped that I was working with my partner Andy over at our build-to-rent development firm because I saw him using VAs and how much they did for him, and they were absolute rock stars. They're out of the Philippines. My VAs are out of the Philippines as well. I always look to delegate in my personal life and even in business too. Like I have my virtual assistants book my haircuts for me. Sometimes I'll have my mom or my sister book doctor's appointments for me, and they're kind enough to do so. So I try to do delegation wherever I can so that I can really focus my time on the things that matter the most and the things that I personally like to do, including spending time with the people that I love without having to compromise business versus relationships. So one of the things my virtual assistants are doing, one of them is handling my email admin, handling, again, getting me on podcasts like yours, and then bringing you hopefully onto our podcast, post-processing the podcast, uploading it to YouTube and all the different podcasting platforms out there. My bookkeeping as well, finds meetups for me to go to in New York City. And my other VA mainly handles social media and then responding to any like text messages that I get. The more I can have them do, and they're really sharp, they're the Philippines, and for them, out there, doctors make 18 bucks an hour, 18 US dollars an hour. So if you're able, this like geographic arbitrage, if that's the right word, that helps a lot too. You don't need to get one here in the US. There's plenty of very capable, hardworking talent overseas that you can utilize.
There's a whole army of VAs working for this agency for like $2 to $3 an hour. And so we basically said, screw that, and went around the middleman and said, we'll double your salary, come work for us. So we're saving ourselves $4 an hour, and we've doubled her salary, right?
Exactly.
And oh, she's so happy. She's so thankful to us for the kind of life that we've been able to provide for her for $6 an hour. So, this is really something that if you're in any sort of business, it doesn't matter if it's capital raising or real estate or whatever, you can find ways to leverage VAs to make your life easier. And I highly encourage you to do it. Do you have any sort of like morning routine or evening routine, something that you're doing right now to maintain health?
I care about my skin a lot, which not be typical for most guys, but I have skincare routines that I'm trying to get more consistent about, morning and evening. Beyond that, it's working out. I do my best to work out 3 to 4 days a week. That depends on what part of the day it is. It really changes. I'm starting to prefer evening workouts though. I used to work out first thing in the morning, but now I like to just get a good couple of hours of work done and then treat the gym as a break and go back to doing work. And in the evenings, usually it's just the hour before I go to sleep, just winding down. Ideally, there's days where I can't follow all of this, and those days obviously are, come and go. But ideally, spend like the hour before I go to sleep not working. I just reflect on the day I had already, what went well, what didn't go well, what could I do better, and then planning for the day ahead, and then get some meditation in or some stretching in. Yeah. That would be my ideal.
Like it doesn't always happen that way, but yeah, exactly. I know. You mentioned earlier that you are very social media averse. I personally view it as a necessary evil, and I certainly have addictive tendencies. So if I get on there, I might end up scrolling for 2-3 hours, and I have apps on my phone which actually only let me access social media between certain hours of the day. So do you find that you have any sort of temptation there, or you are really sort of clean of it?
Yeah, this is really funny because I work for the social media giant. Right. So it's pretty ironic. Reels is really addicting. Like whatever we do at work, they should keep doing that because that stuff's like drugs, but it's crazy addictive. I did some calculation at some point where like every minute you spend on social media for the entire year, that comes out to 6 hours. So I try to just do that same calculation in my mind where if I'm scrolling through, I'm like, hey, this isn't just 1 minute now, it's 1 minute every day. That's 6 minutes or 6 hours a year. Like what could I be doing with that time otherwise? I do have a screen limit on Instagram of like 15 minutes a day. And the other thing that I think that helps is I turn my phone onto grayscale. So yeah, colors are very addictive. So if you just turn everything to grayscale, black and white, I get annoyed looking at my phone now because it's a little difficult to look at what's what. So I only use it if I need to get a hold of someone or send out an email really quick or anything like that.
That's a really good tip. I think it was Hormozy was the first person I saw say
I'm a big Hormozy guy. Yeah, I love Hormozy.
So yeah, if you turn off the color on your phone, it becomes insanely less appealing to use all the time. So that could be a great tip for our listeners. Speaking of Hormozy, do you have a book or a podcast recommendation that has really sort of changed the trajectory of your life?
The trajectory of my life. I think following Hormozy has been very helpful because he started from not much, started the entrepreneurial grind with no network or connections. And he's only 8 years older than I am, I think. So, and he started about the same age, maybe a little younger. So it's really encouraging just to follow along his journey. So his books, $100 million offers, I really liked. I have to definitely go back and give it another read. I have $100 million leads, but I haven't had a chance to listen to it yet. Just given his content, like I watch a lot of his reels on Instagram. If I am on Instagram, it's to watch his reels or like, I don't know, Cody Sanchez's reels, entrepreneurs mostly. I'm guessing his podcast is just as valuable, but I haven't had a chance to listen to it. I think it's called The Game.
Yeah, it is. The Game with Alex Hormozy. And by the way, him and Layla are, I think they're only 1 year older than me, so that would make them 34. So, very, very remarkable what they've managed to achieve by their age. Yeah. So everybody who hasn't heard of them, if you're listening to this, go check them out. Absolutely. Yeah. Go check them out. Okay. Well, thanks so much for coming on. Tell our listeners just really quick where they can find out more about you.
My LinkedIn's a pretty good to start. Keshav Kolur. I'm one of the only ones out there, if not the only one. So perks of having a name that's tough to pronounce is there's not that many of you. Our website's an amazing place. Go to clivecap.com/alternative-assets. There you can find 100 checkpoint due diligence that you can ask anyone you're investing with, regardless of the asset class. Whether it's multifamily, self-storage, industrial, debt fund, you can ask these questions to vet them out. We also have a 2-pager and an ebook that shows you why you should be investing outside the stock market, how the ultra high net worth individuals, people who are worth 30 million or more, how they're investing, and plenty of other educational resources on our website too. And then lastly, check out our podcast, Investing for Generational Wealth, providing a lot of value, just like Michael's podcast here. So
thanks so much for coming.
Yeah, thanks for having me on, Michael. Appreciate it.
That's a wrap for today's episode of Beyond the Deal. I hope you got some valuable insights that you can apply to your own investing journey. Now, if you've enjoyed this conversation, do me a favor, hit that follow button, leave a review, and share this episode with somebody who you think could benefit from it. It really helps the show grow and bring on even more incredible guests. If you want to go deeper, make sure to follow me on your socials. You can find the links in the show notes in the description below. Thanks for tuning in, and I'll catch you next time. Until then, keep going beyond the deal.